So our distributed ledger, you hear about Bitcoin and the blockchain and so forth. Our version of the distributed ledger is to use your bank ledgers rather than you using our ledgers like Ripple does or their ledgers like Bitcoin does. So money movement then is bank direct. So we don't disintermediate banks like Bitcoin and Ripple do. We actually use them as the core of the transaction system. And so one question is, can't the card networks, we heard about MasterCard and Visa having instant payments. Well, can't the card networks do this? And the answer is no, because card networks are limited because they use this interface to the banks called ISO 8583, which was invented a long time ago. And it doesn't do anything for enforcing terms and conditions of a token. There's no end-to-end security. It's all based on securing access to the payment rails, which is why you can wait 3 months to get access. And cards, of course, are not ubiquitous. They are kind of in the US, but they're not ubiquitous worldwide. So in our system, it's really cool. It takes 0 clicks to provision, and so you can just go to any website that supports us, and you can basically say, I want to use token, select your bank. That's one of our banks, and you get in, and magically it knows who you are. So token is kind of like a PayPal, but we're bank-centric. So PayPal, when you do a PayPal transaction, you know how much the banks make in a PayPal transaction? Anybody know? 0. That's to the, 0. So what we do is we say, hey, let's have banks run the system, and we'll just provide the software. So we provide the software for banks to compete against PayPal, which is kind of cool, instead of being disintermediated by PayPal. And for payment cards, same deal. The banks are in the loop. We replace the insecure primary account numbers with crypto. We replace the old style ISO 8583 interface to the bank with the token protocol, and we provide more information. So Walmart can use a very simple API talking to the bank that talks to this token API that sits inside the bank, runs on top of your core banking system, and leverages all your BSA, KYC, AML, and all those other great 3-letter acronyms that people love. Token can also sit on top of any existing payment rail to add more security and control and convenience to people. So it's sort of like a new coat of paint on a home. So the genesis of this idea is from 2,600 years ago, and it's still in use today. In India, tokens are still used. So it's this token is essentially a voucher that can be redeemed for goods and or services. And so we took that core idea from 2,600 years ago, and we said, hey, if we add some things that are new, modern, and cool, that have been invented since the last 50 years, like the internet and state and programmability and URIs and all this stuff that was never invented with all those payment rails, we could create this really powerful payment rail because we have a super powerful payment paradigm that has lasted 2,600 years. All we had to do is just add a few new things, and we have the coolest payment system ever. So what we have is a smart token, and where you can say, instead of a dumb token that just says, hey, can be redeemed for 2 drinks and $5 of casino tickets, it can have programmability. So it can have different rules. You can say, hey, on Tuesday it's redeemable for $10. On Wednesday you can't redeem it. It can have any kind of terms and conditions, and I could say, hey, it can only be redeemed by Amazon or what have you. And so that's what a smart token is. So it's not your father's tokenization. In levels of sophistication, it's the most sophisticated on this scale, where really simple stuff like cash just is a one-for-one replacement for, used to be a piece of gold, but not anymore. Or payment cards, where we just replace the number with another number. And one payment guy said this is paving the cow path, is what we're doing with traditional tokenization. Basic tokenization is like a check, because you can say, hey, must be cashed in 60 days, requires 2 signature if over $10,000. So checks have some limited amount of functionality, but we unlock that. We go way beyond that. So here are some attributes of a token. So you can have a limit, you can have a period, you can have an underlying asset set when it expires. So basically, you can think of a token as an asset that has a set of rules associated with them, and those rules are programmable. So those rules can be anything that you want. It's up to your imagination. And also state. So you can spend down a token, and the token keeps track of state. So you can do things like have a call out to UPS to say, hey, when the package is delivered, somebody can redeem this token. So if I have a shipper who ships me something, as long as when that UPS thing arrives and is set as delivered, then the merchant gets paid. So it's sort of like an instant COD that's guaranteed. So this has huge impact because it can be used for more than just dollars. It can be used for any payment type. So it can be used for any asset type. So the asset could be information. It could be my personal information. It could be securities. It could be pork bellies. It could be commodities, whatever. Or it could be orange juice, line of credit, whatever. So what we did is we took the best of both worlds. We took all the good things about the current banking system. We took all the good things about virtual currencies. We left the bad things on the table. And then we added a bunch of features that we thought were cool and important. And so then we came up with something that's instant secure, bank direct, all this stuff. And it doesn't use the blockchain, it doesn't use virtual currencies, and it doesn't use any of the things that banks hate. So we're kind of like a modern check where you can specify, you can write any terms and conditions on that check and hand it to someone. And you can do that kind of offline because when I hand you a check, we don't need to be both connected to the bank. I can just hand it to you. And so I can write and sign it. So here I'm just digitally signing it, same sort of thing. But the nice thing is because of the rule set, we can emulate any payment type ever created, including payment types that we have yet to create. So, the sky's the limit in terms of what you can do with this. So for instance, if we were to emulate a Visa prepaid card, a simple example, this is the token code that would be required to do that. If we were to emulate cash, this is the token code that would be required to do that. So it's really, really simple. So essentially, we're the ultimate payment type because we can do any of these things. It's very simple, secure, it's powerful, and extensible. Lots of use cases for it. Basically anywhere you have payments. These are interesting because they're more early adopter use cases, but there are many, many more. Anytime you exchange assets, this can be used because it's more secure and easier and so forth. Our focus is not trying to go and solve all those use cases, but just lay the ground rails and create the infrastructure so people can write on top of that and create applications. So we provide software for banks, we provide software for merchants, we provide software for consumers and businesses and so forth. And so the idea is to make them the payments fast, easy, and secure. So for developers, this is really easy. So we have a really simple API. So even if you weren't a programmer, I bet you could understand what that code does. Transaction flows are also very simple. So if I want to do card on file with Amazon, normally I'd have to whip out my credit card, and expose my PAN to Amazon, who would then tokenize it or what have you. But it's still there's still a risk, and a lot of people don't like to expose their card number. So here it's quite different. What happens is I'm just telling my bank I'd like to give Amazon an authorization to withdraw money from my account. I don't use any sort of shared secret, and so there's no risk. And I then digitally sign that with my cryptographic signature, and then I get back a very short identifier. This thing, which is typically 10 characters, I shortened it for the presentation, and then I can just send that across to Amazon, and then Amazon has that token on file. They can then use that really short number and reference it here and say, I want $10 per this token I have on file, and why don't you send it to my Citibank account, which is identified by this token. And then they digitally sign it with their digital signature. They send it to my bank. My bank then looks up the definition for this token, make sure all the rules are satisfied, and then moves the money over to Citigroup. And they actually do that just by signing another digital IOU with their digital signature. So it's all digital signatures, but it's all bank to bank. We can do auto pay with limits. So I can give, and this is particularly important when we pitched the UK, they said, hey, millennials don't like to sign up for auto pay because there are no limits. You just give them access to your to your bank account, and they can charge you $1,600 a month because you were over on your water bill or what have you, and you have no control over that. Whereas with token, you're actually going to your bank, you're getting an authorization to only limit it to $1,000 a month, and if you go over that, it'll go and ring your cell phone and say, hey, do you really want to approve that? Which is exactly what you want from a customer point of view, but the existing systems don't support that. We can do conditional payments where if you're a supplier, we can eliminate letters of credit. And so you don't have to go to your bank and spend 3 months to get a letter of credit from your bank. You can all do this electronically, and you can invoke an inspection by a mutually agreeable third party to inspect the goods to make sure that they were delivered according to the specification, and the third party just hits a button, and the funds are instantly released. No bank person had to be involved. Huge difference. You deposit something, you just take the token and you say, hey, I want to deposit that. You give it your digital signature. If you want to send money, you just give your bank a digitally signed instruction to move money, and it gets moved, and then the person gets notified. If you want to do a margin call, you got to move money really quickly. You can do that instantly because now we can move money instantly. The settlement happens later, but it doesn't really matter because it's all guaranteed. it's kind of like good funds model. So, but you can do this for very large values because it's all known what you have in your bank, and that those funds are basically locked out, so you can't double spend them. For in-store use, you may not have an interconnect connection on your phone, but that's okay because you have crypto secrets on your phone, so you can just digitally sign something with your phone where your phone has the digital secrets in it. And so even though you don't have an internet connection, you can go and make transactions and authorize Walmart to withdraw $10 from your account. We can also do the same thing for P2P. Just like I can hand somebody a check, I can go directly and essentially write an electronic check to someone and give it to them using my digital signature. And then they cash it, and then the money moves in the bank just like it does. But here, all that transaction, whether they're standing right by me or whether it's going cross-border, that happens basically faster than you can blink an eye. FX. So I talked to a payment specialist, and he said, how can you do FX without involving a central bank? And I don't understand how you can do that. And I said, yeah, we got a £5 note. This is a UK guy. And he said, yeah. He pulls out a £5 note. I said, okay, I got a $5 bill. Hey, let's swap. So he swaps. He's full. And I said, see, look, we didn't use your bank, we didn't use my bank, and we didn't use the Fed, and we didn't use the Bank of England on that transaction. Amazingly enough, he says, oh, I get it. And that's been the easiest way for me to explain to people how you can possibly do this stuff. And the beauty of our system is it overcomes all these problems with Bitcoin, right? Because when you hear about Bitcoin, you say, oh, this will solve the FX problem. But the reality is Bitcoin has lots of problems. It has insufficient liquidity problems. Like the winner at Sibos was this, I forget, Epiphyte. And I asked them, hey, how much can you move when you do this instant money transmission? About $100 a day. I said, wow, that's impressive. Because I asked him, hey, can you move 100 million? And he said, no, you can move $100. And so you don't have liquidity problems with the system. You don't have the 1 hour wait that you have with Bitcoin. Bitcoin is a problem that when you transfer the money, it still has to move at native rail speed, from the Bitcoin exchange. And also the Bitcoin exchange can go out of business, and then you're screwed, right? So there's counterparty risk there. Okay, inter-network money transfers. So I have my friend Ben here, who's a Dwolla customer, and I would need to get money to him, and maybe he's not on a token bank, so we can create these gateways to other payment systems. So if you're on a PayPal network, or if you're on a Dwolla network, or you're on FPS or whatever, you can create these gateways between our system and those systems. So for settlement, basically as the system goes, there's some IOUs that are sent by the bank. The banks always send their IOUs to the settlement agent and says, hey, is this good? And the settlement agent then knows what every bank owes each other's bank. So at any time they can say, hey, it's time for cash settlement. Pay in this amount, or I'll pay you out this amount, and they can go settle through the standard settlement rails. So in the U.S., we use the Fed's system called NSS, which is like the professional version of ACH. We can mitigate settlement risk because the settlement agent knows all the bank's positions, so they can ask the bank to top their position if they need to, if they're running short, if they have too high a liability. For security, everything is done through digital signatures. We use QR codes to prevent man-in-the-middle attacks. We use this cool new crypto called ED25519. It's used by Apple, it's used by Ripple, it's not used by people who know their crypto. We have step-up auth because devices can always be compromised, so to protect against that, if you go over your limit, you specify what your limits are. If you go over that limit, then you need to go and enter your auth. So it can be as simple as a PIN code. It could be facial recognition, iVerify, or fingerprint. You could also use your Apple Watch as a second factor, and that can store a crypto secret now in the latest version of that code. There are no shared secrets in the system, so PIN codes are combined with crypto keys, and it's really cool stuff. And so that's way more secure than people have with PIN codes today. And then to protect against malware on the phone, we can access the secure element to run this stuff so that you're immune to malware attacks, which is really, that's never happened before. It hasn't happened yet, so we need permission from Apple and then manufacturers to do that, but they seem to be pretty open to that. Validation, Karen Webster, who was on a panel earlier today, called this game-changing technology. Paul Horlock is former head of payments for Nationwide, former head of payments for Barclays Bank, number 11th largest bank in the world. He has a lot of payments experience. He grilled me for 3 hours, and he said, he apologized and said, I asked a lot of questions because I'm really interested in what you're doing. And then he said, hey, let's do business after about 3 weeks after the meeting. So the people involved in this, myself, I have a track record of creating these technologies sort of before people catch on. So I created one of the first internet search engines way before Google. I invented the optical mouse, had one of the first desktop publishing programs, did spam filtering that Yahoo uses, so hundreds of millions of users use my spam filtering technology, did unbreakable identity startup, and I made billions of dollars for VCs. My co-founder, Yogi Benjamin, has some famous experience. He ran $4 quadrillion when he was CTO for Citigroup. We entered an inter-tribe competition, got perfect scores from the judges. We went to 8 of the 20 largest banks in the world. They said this is the best payment system they've ever seen. Fed liked it too, but of course they can't endorse anything, right? They just nod their heads saying, oh, thank you, this is interesting. They ask you questions. Getting adoption of a new payment rail is really hard. And so even when you know how to do it, it's still really hard. And this is why only fools take on this mission, right? Because it can only be done once every 50 years. There's a narrow window opening right now because the Fed is pushing faster payments and some other reasons that allow us to do this. And so this is like super interesting opportunity. Our success model is PayPal with eBay, basically find a big player. And so you have to find these interesting use cases where you can go in and so in the EU there's something called PSD2, which is a requirement that's sort of written for us that we can go in, and we can also, the regulators have this thing called MIF, which limits the payment card transactions to 20 and 30 basis points for debit and credit respectively, and the banks hate that, as you can imagine. So they're going from 200 basis points down to 20 basis points. You can imagine, a 10x reduction in your fees. Not taken very well by issuing banks. And so we can capitalize on that because we're not subject to that regulation. So any card transaction or any transactions that go through us are not subject to the caps. So in the US, we had our equivalent to that called Durbin, which affects a lot of the big banks. And so there's also the faster payment thing that's being driven by the Fed, and the banks saying, oh, shit, we got to do this. And so it's, there's some things that are driving this, and this is why this is a sort of once-in-a-lifetime opportunity. We can bootstrap the adoption faster by leveraging ACH system and the payment rails that already exist, just like Visa did with Apple Pay, that Visa fronted the banks before the banks took the software, that Visa actually ran the software for the banks. You can do the same sort of thing. We have traction. We pitched to visionaries, the CTOs, CIOs, and so forth at banks. We have big banks in 9 countries, including Brazil. I highlighted Brazil because it was mentioned in the first session as being early adopters in Latin America. Proof of concept, we have this proof of concept going with 4 very large banks. They're like trillion-dollar banks. One's like $1 trillion and change, and lower than it's smaller than $1 trillion. And 4 big brands, so these are $100 billion companies and larger. Key benefits, instantaneous B2B payments is huge for people who are actually in the B2B business. From a consumer point of view, having to do 14 fields to buy your Wi-Fi service on United goes down to just doing touch and picking your bank, and that's it. No more 14 fields. Bill pay is reduced to, instead of having to log into your bank, you just get your bill, it has a button on it, you just click pay, that's it. Consumers love that. Billers love it too because they get paid immediately. Consumer benefits, fast, easy, secure, no friction. Facebook loves this because 3 out of 4 people who try to pay Facebook in developing world can't pay because there's no rail connecting them. They have the money. They want to pay Facebook. Facebook would love to have their money, but there's no rail that connects them. And so this is a big problem. 3/4 of their revenue goes down the tube because there's no payment rail that connects them. Merchant benefits, higher conversion, better customer experience, lower fees, lower blah, blah, blah. Bank benefits, higher fees. We basically cut out the middleman. That's how we can do higher fees and lower costs. Transaction volume goes up as well. Card networks, anybody here from Card Network? Okay, skip that. Core processor, anyone here from core processor? Okay, skip that. Distribution partner, if you're like from Paydiant. Okay, I'll skip that. Great, banks set their own fees. So on a pull transaction, basically the sending bank charges the receiver. So it's kind of like interchange. If you understand how interchange works, it's very clever. And so this way you don't have to go and everybody's competing on price. You can make lots of money in the system. available Q1 in 2016. You've only seen the tip of the iceberg here. We only did 100 slides, you know. But basically, the summary is, hey, look, you know, people get a great UI, right? Programmers get a really shitty UI, you know, on the right. They get a 50-year-old UI. You as a human being get a nice modern API. Imagine what would happen if this was your UI to the bank. Well, this is how our developers feel right now. And so we're trying to change that. We're trying to make it so it's really, really cool for developers to create new applications and move money really easily and securely, and create a better API to the bank for companies and for app developers. And so we're trying to move the whole technology from this 50-year-old pre-internet technology to that we can move the ball forward 50 years in time, and then we can leapfrog all this stuff, this Bitcoin stuff. SEPA is super slow. I mean, you know, better than faster payments. I mean, our early adopters are you know, 2 big banks in the UK are on faster payments, and they're the early adopters for this system. So our goal is to move from hard, insecure, old, slow, blah, 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 to simple, new, secure, fast, blah, blah, blah. So do you guys like this? It's a good idea? Yeah? Anybody think this is a bad idea? Raise your hand. Anybody think that the network should try to kill us? Or good. I've done my job. Okay. So so we're like totally out of. I'll take one question. Can I have?
That's fine.
One question. Okay, just so I can have one question. Anybody? So you can find me. I'm easy to find. I've got a target on me. So. Okay, great. Thank you.